Hello, it is the 28th of March 2012. It is a Wednesday, although the chart on the left-hand side says it's the 23rd. Just ignore that part. And we're looking at the daily chart for silver. Which three levels of Fibonacci using this particular chart would be of importance? And the answer is the one that you see here, which connects this low within this high. And then what has each one done within its importance? Well, it started off here. So what happens at this resistance point? No, I'm not going to say that was important then because you didn't know what the high was. But when you came down here, you knew the high, you knew the low. So what it did was it found support. And then it's at that time frame, it was important from this low to this high. That's not important anymore, but back then it was. Finding a 38.2% resistance level field in here. You find support? No, more often you test it, more likely it's taken out. And then you battle resistance at this level, come back down, battle it again. Better chance of taking it out, did not happen. And since then it's come down. And I think the lows are in for the day, but obviously not too sure. I'll explain that why as we go through multiple Fibonacci levels. The next important one is from this high to this low. So what we'll do is we'll calculate that variable and bring in the chart, and this is what we see. So from this high and this low, the first significant level of Fibonacci is 3338 right here, which obviously did not hit. Now, usually it does, a lot of times, so you can say, oh, that's an area where Fibonacci should have came into play, and yet it didn't. Now, the third level of Fibonacci that's important is from this high, or this low, excuse me, and this high now. Now, you have to see this better, of course, on the shorter charts, the 2 hour, 4 hour, even the 1 hour. And the reason for it is because then if you're getting, we'll say 5 days, well, this way, if we want to take a look at this over 100 periods, then 20 ticks a day will work. That's why an hourly chart with like 120 periods would work just fine. But with that being stated, the second Fibonacci level on the bottom part is 3187. It managed to get down to 3179, so it's pretty much a hit at this level. So therefore, short-term analysis would basically state we should bounce a little bit, at least. If not, go sideways, maybe find some resistance a little over 32, maybe the 61.8% from above here, because that will be the fourth important Fibonacci level if we start bouncing, is from this high and this low. And if it gets to 61.8, then you just continue on working within the analysis from there. However, I don't think the lows are in for the daily chart, even though I think it's in for the day. It does look to me as if we're most likely going to break down below here to that 30 level. And here's some more information on the reasons why, other than it's just so common. Fibonacci hits perfectly many, many times. Well, it didn't hit here, but then if we look at where the lines happen to be placed, what I usually notice is that these two lines just some way, somehow, so many times happen to meet up with major significant levels. So the top level is 3049. How significant is this? Well, back here it's significant, but that's starting to become old school, meaning in a couple of weeks, a little over a week, I won't even see these lines on the chart anymore. It was not resistance here. It did nothing here. A little bit of support in here, but nothing too major. Now, as far as the next line, does it have some key information? Well, it does in here by having some nice support. It works out pretty good in here as well, but nothing hit. So it's okay on that one. Now, if it does go to 30, then this is what the Fibonacci level will look like, and we'll bring this up now, and it will look something like this if it goes to 30. How important is this line? Well, perfect here. Nice support in here. A little bit in here on this, and major here. So Yeah, how about this line? Nice resistance, perfect support, stabilization, and that's where it's hitting now. So this one looks way more relevant than the first one that I'm showing you, which really goes to show me that we'll most likely make a test of this 30 level. Now continuing on further, if it does happen to be a bottom in here, then this is one of those rare situations where it's just going to come into play. And if it does bottom from here, well then what we will see is a left shoulder, a head, and a right shoulder. But in order for this pattern to come into play, it needs to get back to its previous resistance field, roughly at a little under $33 per ounce. And at that point, you would start to see that we're at the neckline and yet another test of this level. But we also got some significant support down here. And breaking below here, the odds does seem likely that the move to 30 would be significantly fast, something that would occur usually within one day, and within that day, maybe something that happens the entire morning from 4 o'clock until 11 or 2 in the afternoon or whenever. That would be the most likely scenario. So how can this type of information work if you are trading within if you're just wanting to buy silver? Let's assume you want to buy now. Well, you can say to yourself, you know what, I'm going to wait. I'm going to, if ATMEX and all Gainesville and all these other coin sites are depending on the spot price for the sales and then $3 over spot, $4 over spot, then if you wait for it to go to 30, then essentially what you are doing is you are either going to have a smaller cost for the price of silver, or you may be able to pick up a little bit more. After all, if it goes down another couple dollars, that's about a 6% gain, which could also, or loss, but 6% addition within the amount of silver that you'd be able to get because of that weight. And that's why when I look back at, say, this chart again, if you're waiting for it to go to this level here, you say, okay, this is where I'm going to short. Well, it didn't hit it, so you didn't get this move in. And this is where, if you were some reason going long here, this is where you're going to sell. Well, you didn't get your sale in because it didn't hit. But I've seen on so many different occasions that it works out fairly well, that the odds are extremely likely that when you get down here that you are going to get some sort of bounce, which is usually either going sideways, or that's where it bottoms and reverses the trend. Of course, the trend since here has been lower, and then to the degree that it corrects is unsure when you're looking within the charts. But if you are looking at something that's got a high probability of bouncing in here, and even if you're just playing the paper game, you're like, okay, once it gets here, I'm going to try to get, maybe you try to go for a 61.8% retracement, because if it does that, then you'd be waiting for it to come down here, so it goes down, and then maybe you have a sell point within this level here as a possibility, as one may play that type of game. Again, whatever you decide to do is up to you, and I'm just giving analysis to how a lot of these movements work out. So I'd like to thank you for tuning into today's video, and have yourself a great day. Bye-bye.